Hi everybody, happy Monday. I hope you're having a good day. We are ready to do property transfer today. If you guys can hear me, give me a thumbs up and we'll get going. Hi everybody, happy Monday. Don't forget that if your screen is a little blurry, make sure you change to 720 HD. So change your settings to 720 HD. Congratulations, Renee Porcia, on passing her California real estate exam. Great job. Okay, so it looks like everybody could hear me. It looks like we have Adrian on the line. Hello, Adrian. And if you guys haven't noticed yet, you see right at the top of my screen, it says property transfer webinar starting in 1 minute from now. So obviously it started. We put we put that icon up there to make it easier for you to click on so you could start the webinar and know when it is a little bit easier than before, and so you're ready to go. Okay, so don't forget that. With that being said, let's go to some property transfer. Clicking through here. Okay. So when we talk about property transfers, we are talking about deeds. But before we do that, let's do the question on the board. A title company could make a title search by searching the records of the A, county recorder's office, B, county clerk's office, C, federal land, or D, federal recorder's federal land and county clerk's office. What do you guys think? And the answer is D, county recorder's federal land and county clerk's office. So that was a little warm-up question that I wanted to start off with. But now let's talk a little bit more about property transfer. And when we talk about property transfer, we talk about the evidence of the debt. And what is that evidence of the debt? Who knows? What is the evidence of the debt? What is the evidence of the debt? Okay, that's that promissory note. Good. The promissory note is the evidence of the debt. Nice job, everybody. What is evidence of the transfer? What is evidence of the transfer? Good luck, Ebony. I hope you do well today. Everybody wish Ebony luck on her exam today. So what is evidence of the transfer? That'd be the deed. Good. Okay, the deed is that evidence of the transfer. And finally, what is evidence of ownership? What is evidence of ownership? Dedicated to Fitness 2 says, you got this, Ebony. Good words of encouragement. Maybe you could give me encouragement on fitness. I think I need to get in better shape. Okay, evidence of ownership is title. Good. What is the difference between equitable title and legal title? Who knows? What is the difference between equitable title and legal title? So legal title is the right to sell, and equitable title is the right to use and possess. Good. Equitable title is the right to use and possess. When you buy a property and you get a loan from the bank, do you have equitable title or legal title? When you get a loan from the bank in order to afford the property, do you have equitable title or legal title? You have equitable title. Why does the lender have legal title? So you have equitable title. Good. That's the right to use and possess and gain equity in the property. Why does the lender have legal title? So why do they have that? Okay, so they want the right to sell it in case you default so they could go with foreclosure proceedings. Everybody got that? This stuff is very important you guys understand. This is the foundation of this whole section. Okay, so they have the right to sell it if you don't pay off the property. Who gave them that legal title? Who gave them that legal title? What do you guys think? Who gave them that legal title? You did. Good job, Thomas. Excellent. The borrower did. That's why they're the mortgagor or the trustor. Remember our OREE rule? What's our OREE rule? What is the OREE rule? Who could tell me what is the OREE rule? OR gives, EE receives. The moment I said who gave that to them, you should have said, okay, it would be the mortgagor or trustor. Good. The grantor is not necessarily correct in that question, Paula, because the grantor has to do between the buyer and the seller, not really with the lender. Does that make sense for everybody? That has to do with transferring interest in the property between the buyer and the seller. It doesn't really have to do with anything with the lender. Now, the grantor can also be the mortgagor or the trustor. They could be the same people, but they're giving different things. Everybody write got it if you got it. Everybody write got it. Because that was a great question. That's a good question. Oh, Concetta says the borrower gives the money to the bank receives the money in the mortgage. That's not that's true, but that's not why they have the OR. They have the OR because they give that evidence of the debt, that promissory note. The OR and the EE in all of this refers to the first action taken. Did everybody get that? So the giving the money to the bank is really like the third or fourth step in the process. The OR or EE has to do with the first action taken. Okay, so then you have the evidence of the transfer. What did we say represents the evidence of the transfer? What did we say represents the evidence of the transfer? The deed. Good, the deed. Who could tell me different types of deeds? What are some different types of deeds? There's lots of deeds, but we don't need to know all of them to pass the real estate exam. What are some different types of deeds? Anybody ever see that Adam Sandler movie, Mr. Deeds? Deeds. A lot of people don't like him. I find there's a love-hate relationship with him. People that love him or hate him. Who's seen that movie? I think it was like 10 years ago, maybe 15. But if you've seen that movie, all the interest and all the ownership of the property is being transferred to him. That whole movie was about transferring interest. Those of you who've seen that movie know what I'm talking about. It's when he's from a small town in New Hampshire, gets flown to New York to inherit a big business because everything's being transferred. Does it make a little more sense now why they called it deeds? It's kind of a play on words. Because deed represents transfer, and that whole movie is about all the ownership of things being transferred to him. Okay, so I see first on the board, I see a quitclaim deed. Okay, so what is a quitclaim deed all about? Thanks, Concetta. Appreciate the kind words. Okay, so what is a quitclaim deed? Claudia Jones says no money exchange. Usually that's the case. Doesn't have to, but usually that's the case. Okay, quitclaim deed represents immediate transfer of the property. Represents immediate transfer of the property. Okay, that's why a lot of you guys give examples of like amongst family where there's no money involved. Basically, you're changing the name and the ownership of it. So a lot of you guys give me examples. Give me the definition of it. Give me the definition of quitclaim deed. So saying things like family or divorce or immediate transfer, those are all good examples. Give me the definition of it. So the definition of a quitclaim deed is no expressed or implied warranties. Everybody write that down. No expressed or implied warranties. No express or implied warranty. Okay, everybody write that down. So what does that mean? Remember, we don't always want to get caught up with examples of everything without actually knowing the definition. The examples of things are there to help you understand something, but if all you're remembering is the examples, it really doesn't help that much. Who's guilty of that? How many of you guys, when you're studying, you could crank out all these examples, but you don't really know what it's all about? It's like saying repairing river. Why are you saying river? I don't know. I just remember river. Sounds good. Who's guilty of that sometimes? Repairing river. Why do you say river? I don't know. Sounds good. Okay, so when we said quitclaim deed, a lot of you guys gave examples of amongst family, brother to sister, and divorce, father to son, etc. So you have no express or implied warranties. So let's break that down, what that actually means. What that actually means is the problems that have the property, the burdens on the property, the encumbrances, if you will go with the new person. Okay, that's essentially what it means in very simple terms. Everybody got it? It's saying all the encumbrances, all the problems, any lawsuits, things of that nature will carry on to the new owner. So in simplest terms, that's what that means. And so that should explain why you guys have those examples of family and things of that nature, because those examples that you gave, the person taking on the property, generally speaking, will already know what the problems are because they probably live there themselves or are very close to the people who are living there, something of that nature. Yeah, assuming liability. Good job, John Doe. Great way to say it. Okay, so that's the simple way to say it. So hopefully that makes those examples you gave make a little more sense. So Stephanie said, Joe, is the grant deed the only one with 2 implied warranties? So Stephanie, it depends what state you're in, but you can either have a grant deed or a warranty deed. Grant deed or warranty deed. Oh, I'll say that 10 times. Depending where you are, you may use either one, but they both function the same way. And what those have, they do have implied warranties. I'm not exactly sure what the 2 are. We'd have to look that up a little bit more. But to your point, they do have express or implied warranties. That's why usually when you sell the property and money's transferred or you're not that close with somebody, you'd either use a grant deed or a warranty deed. Everybody got that? Okay, everybody got it. Just so I know we're all there before I move on to the next phase of my little lecture here. So as you guys know, the internet connection sometimes cuts out depending where I am. Those guys who've been doing this for a year or more know that. So when I want to check in, I'm just checking in to make sure I'm still connected to you guys. Otherwise, I'll end up talking to myself. And Ann wrote she had a personal experience with the quitclaim deed. Cool. That's always good when we can actually relate some of this stuff to things that actually happen. It's one of the scary things about doing these webinars. You may end up talking to yourself without knowing it. So Adrian just wrote the 2 things for a grant deed on the board. I forgot who asked about that, but there that is. Thank you, Adrian, for writing that. So a little bit more about the warranty deed. The warranty deed. There's 2 types of warranty deeds. A general warranty deed and a special warranty deed. Who knows the difference? What's the difference between the 2 types of warranty deeds? What do you guys think? So the general is the full history of the property, and the special only goes for the life of the previous owner. Thanks, Cynthia. I appreciate it. So special is only for the previous owner, and in general goes for the life of the property. Okay, good. Remember to refresh the page if it buffers at all. Okay, let's do the question on the board. Which of the following deeds would least likely contain implied covenants by the grantor? A, grant deed, B, gift deed, C, quitclaim deed, or D, warranty deed? Brittany Bailey says, what is a bargain and sale deed? Adrian, would you mind looking up what a bargain and sale deed is? Yes, I hope all you guys get this correct. We just spoke about it. The answer to this is quitclaim deed. So we ask which of the following deeds would least likely contain implied covenants by the grantor. The answer is quitclaim deed. What do you guys think? Should we do a video on all the different types of deeds? What do you guys think? Just a big deed video? Explain different types of deeds. We might already have one somewhere in our library of videos, but maybe we can make a new one, a little more fancier. Okay, Adrian wrote, bargain and sale grantor makes some promises regarding title, but only related to the period the grantor owned the property. Adrian, if you don't mind, copy and paste that one more time as it went through the chat pretty fast. And I want to answer that question for whoever asked that. Okay, here we go. A broker shows a prospective buyer a home. The buyer makes an offer and the seller accepts. The broker, buyer, and seller then go to the reliable escrow company where the buyer makes out a personal check for a $1,000 deposit payable to the reliable escrow company and hands it to the escrow officer. Which of the following is correct? A, the broker has to keep a record of the check in his record of all trust funds received and not placed in his trust account. B, the broker has to keep a record of the check in his separate records for each beneficiary or transaction. C, none of the other options are correct. D, the broker has to keep a record of the check in his record of all trust funds received and paid out. What do you guys think? And the answer is A. The broker has to keep a record of the check in his records of all trust funds received and not placed in his trust account. A defect or a cloud on title to property may be cured by A, obtaining proof of satisfaction from all appropriate parties. B, bringing action to repudiate the title. C, bringing action to register the title. D, paying cash for the property at the settlement. Now I'll read this one again. A defect or a cloud on title to property may be cured by A, obtaining proof of satisfaction from all appropriate parties. B, bringing action to repudiate the title. C, bringing action to register the title. Or D, paying cash for property at the settlement. And the answer is A, obtaining proof of satisfaction from all appropriate parties. On Friday, I went over our vocabulary system that we put together. Did any of you guys have a chance to use it? Did any of you guys have a chance to use that vocabulary system we built? If you guys have feedback on that, let us know, because we know we just launched it. So it could have some clinks. We understand that. So we want to fix those. Ooh, Brittany Bailey used it on her phone. Where could you find it? It's on your control panel. Just click on vocabulary, and you can find it there. Paul, the chat's moving fast. Remember, we have this all recorded. You can watch these again. You can always watch them again. So we have them all there. Lazarova, can I go over RESPA and truth of lending? Yes, I can. We'll do a webinar on that. Okay, so it looked like she wanted to see this question again, so I'll look at it again. Okay, Paula, we'll go over it again. I see you in the chat. Okay. A broker shows a prospective buyer a home. The buyer makes an offer and the seller accepts. The broker, buyer, and seller go to a reliable escrow company. The buyer makes out a personal check for a $1,000 deposit. Payable to reliable escrow and hands to the escrow officer. Which of the following is correct? A, the broker has to keep a record of the check and all of his trust fund receipts and paid out. B, the broker has to keep a record of the check in his separate records for each beneficiary of the transaction. C, the broker has to keep record of the check in his records of all trust funds received and not placed in his trust account. Or D, none of the other options are correct. What do you guys think? We just did this one before. Looking at it again. Okay, so all this means the broker has to keep a record That's true wherever you are. You always have to keep a record of all the money that's received and placed out. Once money goes in your possession, there has to be a record of it. You can't just take money and give it to people. Bro has to keep a record of the check and his record of all funds received and not placed in his trust accounts. So you must account for money that goes through your hands. Okay, which of the following would alienate title to property? A, conveying title. B, securing an altered policy of title insurance. C, clouding the title. D, recording a homestead. What do you guys think? The answer is conveying the title. So conveys to get rid of it. Okay, conveying is to get rid of something. To rehabilitate real property usually means A, the property must be replaced to obtain its highest and best use potential. B, the use of the property will be changed. C, design changes must be made to the property. Or D, the property will be restored to a good condition. And I'll read it again. To rehabilitate real property usually means A, the property must be replaced to obtain its highest and best use potential. B, the use of the property will be changed. C, design changes must be made to the property. Or D, the property will be restored to a good condition. What do you guys think? The answer is D. Okay, here's a question for you guys. When a property depreciates, it can be due to economic obsolescence, functional obsolescence, or physical deterioration. Which one of those would be cured through rehabilitation? So when a property depreciates, it can be due to economic obsolescence, functional obsolescence, or economic obsolescence, or physical deterioration, excuse me. Which one of those can be cured through rehabilitation? And that'd be physical deterioration. You'd cure functional obsolescence through remodeling. Everybody got that? Everybody got it. So functional obsolescence would be cured from remodeling. And generally, economic obsolescence is cured by just moving to a new neighborhood. Okay. Ralph sold his house to Oscar, who did not record the deed but took residency there. Ralph then sold the same property to Larry, who reviewed the county recorder records but did not examine the property. Ralph gave Larry a deed which Larry recorded. Which of the following would be true concerning title to the property? A, Larry has recourse against Oscar for failure to record. B, Larry and Oscar are co-owners of the property. C, Larry now owns the property because he recorded his deed first. D, Oscar maintains title. Okay, I'll read it again. Ralph sold his house to Oscar, who did not record the deed but took residency there. Ralph then sold the same property to Larry, who reviewed the county records but did not examine the property. Ralph gave Larry a deed, which Larry recorded. Which of the following would be true concerning title to the property? A, Larry's recourse against Oscar failed to record. B, Larry and Oscar are co-owners of the property. C, Larry now owns the property because he recorded his deed first. Or D, Oscar maintains title? And the answer is D. Oscar maintains title. Okay, good job, everybody. Okay, we went over this when we started the webinar today. The primary purpose of a deed is to A, give constructive notice, B, prove ownership, C, transfer title rights, or D, prevent adverse possession. This one should be pretty simple. And the answer is C, transfer the title rights. And just to look at this one again, the reason in this one Oscar maintains title because he did his action first. Recording and possession function the same way, and whichever one does that action first will maintain title. Okay, move right along. The unadjusted basis of a taxpayer's residence would be A, cost minus improvements, B, cost plus improvements, or C, cost plus improvements minus depreciation, or D, costs. The unadjusted basis of a taxpayer's residence would be A, cost minus improvements, B, cost plus improvements, C, cost plus improvements minus depreciation, or D, cost. And the answer is D, costs. Okay, good. The unadjusted basis is the cost of ownership. Prepaid insurance and tax reserves in which the buyer assumes the mortgage will appear on a typical closing statement as A, credit to the seller only, B, credit to the buyer and debit to the seller, C, debit to the seller only, or D, debit to the buyer and a credit to the seller. And I'll read this again. Prepaid insurance and tax reserves in which the buyer assumes the mortgage will appear on a typical closing statement as A, credit to the seller only, B, credit to the buyer and a debit to the seller, C, debit to the seller only, or D, debit to the buyer and a credit to the seller. And the answer is D. It looks like a lot of you guys got that right. Debit to the buyer and credit to the seller. Okay, just remember, debit's money you owe and credit is money that's coming to you. Debit is money that's owed and credit is money that's coming to you. Your closing statement, you will have debits and credits. Debit is money that's going to have to be paid out when it's all done. Credit is money that's coming to you. So for example, very often prepaid taxes, when a seller pays them off and the new buyer gets it, they'll credit those taxes back to the seller. Okay, if special warranty deed differs from a general warranty deed in that the grantor's covenant in the special warranty deed, A, is implied, is not written in full, B, covers the time back to the original title, C, applies only to a definite limited time, or D, protects all subsequent owners of the property. And I'll read it again. A special warranty deed differs from a general warranty deed in that the grantor's covenant in a special warranty deed, A, is implied and is not written in full, B, covers the time back to the original title, C, applies to a definite limited time, or D, protects all subsequent owners of the property. And the answer is C, applies to only to a definite limited time. Remember we said a special warranty deed is for the life of the previous owner as opposed to a general warranty, which goes for the entire life of the property. Said that earlier. All right, guys, that's it for today. We got the week off started with a pretty tricky topic. Tomorrow we're doing contracts. We should have a lot of people there. People like doing contracts. That'll be at 4 o'clock Pacific time tomorrow, 7 o'clock East Coast time. Other than that, this is Joe from PrepAgent with Adrian. If you have questions, send questions through the website. That's the best way to get in touch with us. And we will talk to you then. Good luck, Concetta, on your test today. I hope you do well. Let us know how it goes. Other than that, have a great day, guys. Bye. Thanks, Shane.